Hi, this is the market outlook for the week starting Monday 17th. It is 7:45 UK time. Futures have reopened a little bit up, bumping on the resistance area that we've seen last week, 29.05, 29.10. And I believe we may have the same type of congestion at least until FOMC later this week. If we look at the calendar, we've got no major news today, a bit of news tomorrow, and probably a lot more towards the end of the week with FOMC and jobless claims. So if we look at this chart, it looks like it's of course still bullish, although on the 1 hour chart we see a dead flat almost all week bumping on resistance area, but actually not the major resistance we would be anticipating, 29.20, I mean the high 29.20s, and of course a major hurdle on all-time highs and this area around 29.70. So does that mean the market is ready to retrace? Well, it will need some form of a shock, exogenous shock, coming from, for instance, FOMC this week. If the market retraces, there would be some support area in the 2870 area, which is actually only the resilience level for this bullish market, and then probably stronger around 2840, 2820. Will the market then, if we go back to the daily chart, would we have then a second wave? Although we're still in a long position, so to say, and going below 2800 looks unlikely in the short term. If we now have a quick look on the Russell, surprisingly, and that's something I've been repeating over the last few weeks, the market has been holding above the resistance area. It happens that sometimes this reddish line acts as the yellow pivot line. So the market could actually hover in a range 1440, 1450, 1460 to the 1550, 1560 area. The range is narrowing, but at this point it looks like the market would probably go up and not more than down, which is slightly different from SPX. That said, we have that pivot line here around 2805, and we also have a range 2730, 2910. So this could be, considering volatility has been up in the last few months, we could have actually a larger trading range, more or less directionless, going in cycles. It could then, if the market breaks 2820, go and hover in the low part of the range. If we look at volatility, we see that implied volatility has kind of gone down, which is normal in this bullish, and then this is a daily chart, by the way, and range trading we've had the whole week. So volatility is still okay, actually. I mean, we are in the 14-15% area, and if we even look at projection for this expiration week, it will confirm that we would have, at best or worst, a range expansion to the low 2800 to, again, this strong resistance area. So not much concern over the short term. As you see here, IV is going below historical volatility, which is not a great time generally to sell premium. But it's actually now we're going into the last month to July, so time to peel them off and probably protect profits. So that's all I have to say about the market outlook. This is going to be probably a fairly easy week for our positions. Please note that on Thursday I will be very little available. I will be available at the open and probably be away from my computer for the remainder of the session. Okay, the next video will be on a closer look at our positions.